Hi guys, Will here from WB Trading and welcome back. So I was actually making this video for a personal friend earlier, but I thought, no, let me properly put it together in good enough quality to share on the YouTube channel too. And within this video, what we're going to be discussing is how to identify trend strength and how doing this can allow for an accurate trading stop if you'd like to trade a stop, of course. So let's dive in. So broadly speaking, there's two types of strategy, isn't there? There's trend and momentum based, i.e. the kind that look to capture large directional moves. And then there's counter trend based, i.e. the kind that look to capture a reversion to the mean. Today, of course, we're going to focus on the former, and one simple way, and in fact probably the most simple way to do this and to assess trend strength is using moving averages, isn't it? Now, I know they're a simple indicator, there's no doubt about that, but if used well, if understood well, if researched well, they can certainly be an asset in my opinion. And there's a reason why you see them on so many professional traders' charts. Now, yes, the traders may only use them as a reference point, and we won't get into all of the ways that you can actually use them today. But just as a quick example of this, I do know a trader who's actually built an edge around the 5-period simple moving average, and obviously without going into detail here, she's built some immensely detailed statistics on the amount of daily candle closes on one side of this, and she knows these absolutely inside out. Okay, and when she sees X amount of closes on one side of this 5-period simple moving average, her system then gives her a buy or a sell signal, and she then counts forward based on her statistics. And this is a proven strategy that she's been using for into the years now, I believe. And just to add some weight to this, she used to actually run quite a large hedge fund over in the States. So I'm not talking about any small novice trader here. And I say that because some people might even laugh at the mention of moving averages. So the fact that one of a former hedge fund manager's strategies was actually built around the moving average speaks volumes, in my opinion. Anyway, back to my point. We're able to use moving averages to assess trend strength. And the way I do this myself is personally using a 20, a 50, a 100 and a 200 period exponential moving averages. And I break these down into 4 categories. So a very strong trend, i.e. when price is staying above the 20. A strong trend, i.e. when price is staying above the 50. A weak trend, i.e. when price is staying above the 100. And a weaker trend, i.e. when price is staying above the 200. Now, I say weaker trend, but that certainly doesn't mean a trend isn't still occurring. So as far as I'm concerned, if I'm taking, or even if I'm in a trend-based swing trade and we're seeing sustained closes above the 200 period, that's going to keep me in a trade because I consider the trend valid if above the 200 period. And by the way, if you're enjoying the video today, it would be great if you'd literally take just a second to hit that thumbs up button. That'd really help me if that's okay with you. So let me slot some more weight into what I'm saying here by sharing a quote from a pretty well-known trader. All of you should know who Paul Tudor Jones is, who said the following. So he says, "My metric for everything I look at is the 200 period moving average," and that's directly quoted from his interview with Tony Robbins inside Tony's book Money Master the Game. And the fact that this is, as far as he says himself here, the only indicator that he uses and actually pays attention to gives a lot of weight to a simple indicator, doesn't it? But again, it's not about the tool itself, it's how it's used, it's how it's understood and built on and so on. And again, that links back to the hedge fund manager who I mentioned earlier. So I'm sure all of you who watch this video will be using a host of different strategies, but what I'd ask is, for those of you who are trying to identify and trade a trend-based edge, how big a move and how long a hold time are you looking for? Because this question makes all the difference. So for example, if you're only wanting to, let's say, day trade, and you want to be in and out of trade slightly faster, you'll most likely want to focus on a lower period moving average, i.e. the 20 period as an example, because price doesn't tend to remain above this for quite as long as a high period moving average, does it? And of course, on the other side of this, if you're wanting to swing trade or position trade and really stay in trades for as long as possible, you'll most likely want to focus on a higher period moving average, i.e. the 100 or the 200 period perhaps, as two examples, because price, again, does tend to remain above these for much longer than the former. Another thing to pay attention to is the size of pullbacks. And again, you can use moving averages to judge these. But as an example, if you see, let's say, a V-shaped reversal that cuts right back through all of the moving averages in one big sweep, as we've mentioned, it's likely that the trend is starting to wind down. Not always is that the case by any means, but the probability of continuation does, from my experience, start to diminish when you do see this happen. By the way, guys, if you can hear some noise in the background, I'm sorry about this. I've got some building work going on pretty much right next to me here in my apartment block. Hopefully that doesn't come out on recording, but if it does, yeah, hopefully you can bear with. So how to trade a stop loss? Well, there's a few simple, straightforward ways to do this. One being using market structure, i.e. obvious new highs and or lows, depending on whether you're long or short. Two being to trail a stop just behind a moving average. And I say behind and not on because, as we all know, price tends to run along and revisit the moving averages. So you don't want to be nipped out of a trade that's actually working for you. And three, a combination of the two. So using a moving average as a guide, yet pairing this with market structure. So that's the way I trail a stop myself, using both. And I try to be as sparing as possible. So I'll only trail a stop when a trade is clearly working and I actually have room to do so. So it's more market permitting. So I could go on here and there's a lot more to talk about, but I don't want this to turn into an hour-long workshop. But if you would like me to expand on this further, drop me a comment below the video letting me know you'd like me to put together a part 2, and I'll do that for you. Remember, this channel isn't here for me, it's here for all of you. So whatever I can help with, just let me know and I'll get the video put together for you. Also, just very quickly, if you aren't already subscribed, it'd be great if you'd hit that subscribe button, and don't forget to hit the bell icon too, just so that you don't miss any of the videos that I upload and share here on the channel. Anyway, I hope that helps. I hope that's triggered some inspiration, given you some things to think about. I'll leave it there for today, but as always, trade with Edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, everyone.